All right, everyone, thanks so much for joining us. I'm Natalie from Domum. I have Tim Alatoria, our principal architect, and our guest speaker, my sister, Julie Hassna, who is a certified financial planner with Northwestern Mutual. So today we're going to be discussing a little bit about the stock market and some of the ways that Americans are being benefited right now.
So just to start off with, there's been a lot of debate about this in our office. So Julie and Natalie, you two really are sisters. This isn't just
That's true.
It's just not for publicity's sake. You really are related.
We really are. And I actually have the same color hair as her, but
oh, secrets are coming out all over the place today.
yeah.
Okay, see that we didn't know that. This is new stuff. And Julie, where did you go to school? Out of curiosity.
I went to University of Nevada in Reno.
Oh, fantastic.
Yeah.
Not too far from here.
Yeah,
So,
I was here.
So I'm sure that you are just staying up late at night reading and trying to stay on top of this rapidly changing financial environment. It seems like, you know, the bills that are being proposed and those that are being passed, it's just both on the state level and on the national level, it's really crazy to keep up with.
Yeah, it's been quite a wild ride for the past few weeks. Things have been, hour by hour changing. And so we've had some circuit breakers, which is when the market will just shut off if there's a free fall. So we've had a couple of those, which we really haven't seen since the 2008. And so those things definitely make people nervous. But overall, it's a great opportunity for new investments or to continue your investments because you're buying at a discount. So if you don't need the money right now, it's been a great opportunity for my clients, especially the ones who are investing for long periods of time, ones that, especially for retirement, if they're not using that money for a long time.
Right, and I think it's a good investment, if I can read between the lines, because we know the market is going to rebound at some point. If it's 3 months or 10 years, it will come back to the levels we're at now. So if you're putting your money in, it's going to appreciate. Is that
historically? Yes, we've never seen a period of time where the market has continuously go down for 10 years or even 5. So if we're investing for the long term, usually there's going to be a rebound. And what our investment analysts are telling us is that when this all started to happen, we had a very strong economy going in. So, this is not a financial crisis like we saw in 2008. This is a healthcare crisis and that kind of crisis. So what our investment analysts are telling us, we're not sure when the rebound is coming, but when it does, they expect it to be strong.
And something we were thinking and talking about in our previous videos is when it does come back, we're thinking it's going to come back fairly quickly because all those base financial and economic factors are still in place, that when it rebounds, it's going to be a shorter window than the rebound from the 2008.
That's what we're expecting too, is that the rebound will be pretty quick and the economy will get back on track because it is, again, not a financial crisis. So there isn't cracks in our financial foundation. But the world is experiencing just an economic shutdown because most businesses can't be open during this time.
Right.
A lot of businesses.
And you probably have some restrictions with your licensing and certifications for giving just broad stroke financial advice over YouTube video or Roku.
Oh,
if
yeah.
you're watching this. We have no problem giving financial advice, and we can just put the disclaimer, go talk to a professional, right? Like Julie. So maybe you could talk to us a little bit about some of the laws that are being passed and the stimulus packages and maybe some things that people watching this should be aware of.
Yeah, so they passed that stimulus package last week. And the heart of it and what most people heard about was the $1,200 check that most Americans will be getting. Only Americans making less than $75,000 a year will be receiving that. And then the phase out is fully at $99,000. So if you make more than that, don't expect a check. And the other big parts were there was some unemployment that was expanded to business owners, which was a good thing for some of the gig economy workers and small business owners. And then the other big one was the student loan. So federal student loans up until September 30th will be 0% interest, which is really an amazing thing for the next 6 months. For people that aren't being impacted financially by this crisis, they can really pay down a lot of their principal, which is really amazing, especially since some of the loans can be as high as 7%.
Right, that is amazing. And for the small business aspect, I was looking into that a little bit because we classify as a small business. And
Right.
maybe you can touch a little bit on that, because a lot of our clients do own small businesses. They own cycle, spin classes, what's that called, Natalie? Not a spin.
Cycle life.
Yeah, but what's that kind of business called? A gym?
That is a
Fitness
cycle
video,
facility.
right?
Cycle facility. Yeah. So bar owners and restaurant owners and cycle facility owners and developers and contractors. So most of our clientele are small businesses. So maybe you can touch a little bit on what you're seeing.
Yeah. So for the small businesses, there's small business loans that are available, and some of it can be forgiven based on paying your payroll with it. So there are some parameters around that that could be really helpful for business owners to kind of keep things afloat and make sure that if they can keep their employees, that they can keep paying them, and then they have some special loan forgiveness for that, which is unheard of. Loan forgiveness is not really a thing that happens for small business very often.
Right, and I know probably not concurrent with the stimulus package, but the SBA has also put a freeze on payments, I think, for SBA loans. If
Some SBA loans, I think, have put a freeze on that. Big banks have put a freeze on mortgage payments. I know, depending on what your credit situation is, it could be good to reach out to the lender to see what's available. Some are deferring for 60 or 90 days without penalty. So there are a lot of options, especially if you're a business owner and you've got a lot of bills coming up. So this might ease some of that pain during that time.
Right. And then on the SBA loans or the payroll sick leave loans, you said some of that can be forgiven. It's up to
Right.
$10,000 on it.
Right. So I'm not sure too much about the, parameters around the forgiveness, but I know it was based on a percentage of employees in the payroll. So that could be a great thing for business owners during this time.
Right. I mean, for us, our number one expense is payroll. That's pretty much all we spend money on. A little bit on rent, a bit more on software, but mostly
Yeah.
employees.
Most businesses, their biggest expense is their payroll. So
yeah. So maybe we circle back to the main topic of what we're trying to talk about, right? So in our first video, we set up this idea of the perfect storm and how there's all these market factors that are coming together. Yes, there's negative sides, but there's also silver linings. So for example, on the real estate side, we talked with realtor Nick Judd in our last video, and he was talking about how because there's a lot less demand and less supply, and actually it was interesting on the supply side in real estate, people who are just putting houses up for sale just to kind of test the waters and say, hey, if I can get 5% over my value, great, I'll sell. Otherwise, I won't. Those people are backing off. And really the motivated sellers, the sellers that really need to sell, they're still on the market. And then the people who really need to move, or people who've had a hard time getting into real estate and buying a house, they're actually the ones who are now having opportunities to move into the real estate market. So we're seeing some real opportunities there. Also, material costs. We talked a little bit about how those that whole landscape shifting, and then labor costs. We got a bunch of contractors who are not working and
right.
Kind of shut down.
And I think that was a huge difference, going back to 2008 that Nick brought up, is that previously it was investors trying to buy 2 to 3 homes. They'd never done it. They didn't understand the business concept and plan. Where this market, though the housing is slowing down and dropping, it's simply due to people taking their homes off the market, and then homeowners finally getting their chance to sneak in with either a VA loan or, a more risky loan.
Right. Yeah. So a lot of my clients, their dream is home ownership if they haven't already achieved that, or some of my clients are looking to buy a second home at this point. And so for them, what we're doing is taking this opportunity where, we've been saving and planning for this opportunity, but now might be the right time because interest rates are so low. And again, there isn't as much competition because there's not as many people out buying. So, I'm not an expert in real estate. I'm not a realtor or mortgage broker, but I do help my clients figure out, is this the right time to make a purchase like this? Or, is this something where we hold off? And so my clients that are, in a financially sound place where they've, built up their down payment, they've got some extra for things that go wrong, because inevitably when you buy a house, the water heater has to go out instantly. It's just how it works. So you got to have some extra cash on hand. And for those buyers, this is a great time to get in where they won't have as much competition. Maybe they might be able to get a more favorable interest rate or loan than maybe a month ago.
Right. So if somebody came to you today and said, "Hey, Julie, I've got some funds, or I've got a portfolio I'd like you to consult with me on," how might your advice change today as to what it was at the beginning of the year or end of 2019? Are you taking a different approach to managing assets and funds? Or
the goal of investments in the way that I run my practice is always what is the underlying goal. So if it's retirement or homeownership or some other big goal that we're saving money for, that's always how we invest. So we look at, okay, if we're looking to save for retirement, how much do we really need today to put away in order to get to that goal? And then we invest appropriately. So if it's retirement and we're talking to a 30-year-old who's got, 30 plus years to save for this goal, then we're probably going to be a little bit more on the aggressive side because we've got the time to recover from markets like this. If, say, we're using the money in 5 years, we're probably going to be more on the conservative or, somewhere in the middle, rather than being a little bit more aggressive because we don't have as much time to recover. And so we don't really invest based on what's going on in the market. We invest based on what the goal is and how much volatility someone can handle. Because at the end of the day, I don't want any of my clients up at night feeling like they're invested too risky so that they're losing sleep because their accounts are going down. I want them to be in the right amount of risk for the goal that we're trying to achieve.
Yeah, and I know you don't focus on the real estate side. You're focused more on other investment vehicles. But I think what your advice that you just gave right there really translates also to the investment side on real estate, where if you're looking at your dream of making money in real estate development, either flipping or purchasing and holding, don't look at the market in the snapshot of today as the risks. Look at the long term of what's going to happen with that property in 5-10 years, or even it could be 3-6 months, right? But
right.
Look outward, recognize that right now there's some deals out there, and capitalize on those with the eye looking forward, as opposed to, I think, if somebody came to you right now and said, "Hey, I want to invest in the stock market," would you say don't do it because it's really risky?
No, I would say definitely do it if you have the time horizon.
Right.
If you want to use the money tomorrow, definitely don't.
Probably not, yeah.
But if you've got 5 years, if you've got more than 5 years, then now's a great time because you're buying at a discount.
Right. Yeah, and I think the same thing applies to real estate and construction. Also, we haven't talked about this much yet, and we should probably have somebody who does deal with mortgages and stuff on our new little program that we're doing here, Natalie. But interest rates and getting loans and things are, the whole landscape has changed dramatically over the last 3 months. And
right.
And like you were saying, there's probably more opportunities now. We were talking with Nick last time about VA loans, where those are great loans, but they're hard to sometimes close on because there's a bit more paperwork. Now there's more opportunities for people to get into their dream of owning real estate or getting that second home. Today we were talking with a friend of mine. He's an architect down in Costa Rica, and he was saying now is a great time to buy a property in Costa Rica. If you're kind of in that demographic, there's a lot of people who they live here, but then they have their vacation home in Costa Rica.
Right.
Or right now there's a lot of Americans who have escaped down to Costa Rica to get away from everything that's going on here, and they're in shelter in place mode in Costa Rica as well. But instead of sheltering in place in downtown Sacramento, you're now sheltering in place on the beach of Costa Rica.
Not so bad.
Yeah. So, and those opportunities are
Yeah.
available now. You know, there's deals to be had there too. So, yeah, that kind of eye looking forward. I love that mindset.
I guess the last thing I'd add is, you know, if you've got questions, I'm happy to answer them, be a resource for, you know, your network. And there is a lot of opportunity right now. I mean, there's a lot of uncertainty as well. So, you know, cautious is a good way to go, but also, you know, knowing what's available as far as opportunities and what's not. I'm happy to answer questions on, you know, what do I think about what's going on in the market and whether or not it's a good time to invest in certain things or not.
So if somebody did want to speak to you and have you help them with how to manage their portfolio or start a portfolio, what's the best way for them to get in contact with you?
So they can reach out through my website, or I'm on social media on all of them. So LinkedIn, Twitter, Facebook, and Instagram.
If you had a magic ball, what do you think is the time frame of seeing more normalcy back into the stock market?
Well, that's a question everybody wants to know, right? So, and unfortunately, nobody's crystal ball is very clear. So what I will say is, I don't know, but missing out, the most important part about investing is being in the market. And there's only very few days in the market a year that makes it in the market. So your returns come from very few days. And if you're out of the market on those days, that's when the huge losses come from. So my word of advice is stay the course with your investment strategy. And if you don't have one, working with a professional really helps to make sure that you stay on track. It's kind of like having a personal trainer. Like, you probably know what to do at the gym, but if somebody's waiting there for you to get you over there and help you, you're probably going to get better results.
And don't panic. That's my number one piece of advice, everybody. Take a deep breath. It's going to be okay.
Yeah.
Wash your hands. Don't touch your face.
Oh, I touch my face all the time. It's a bad habit. I'm working on it. This whole coronavirus thing is going to shake me that habit. So, well, thanks, Julie. Really appreciate you coming on.
Yeah, thanks for having me.
Yeah.
All right, thanks everybody for taking the time to watch our video. And Julie, thanks for taking the time to give us some information. We really appreciate it. For future videos, please let us know in the comments what you want to learn about and who you want to hear from. We have tons of resources, and we really look forward to having more segments on things that you guys want to see. So,
yeah, thanks everybody. We'll talk to you soon.
Thanks.
all right, thank you so much.